I really want to earn inflation-beating returns, but then I also want to save taxes.
Many people pick investments to build wealth over time. Why not choose investments that create wealth and save taxes? Hello and welcome. I am Prarthana from Clear, India's largest tax and financial services platform. At Clear, we have assisted 6 million plus tax filers so far. Do subscribe to our channel to support us and get to know more about the best financial investments to reach to your financial goals. Equity Linked Savings Scheme or ELSS is an excellent investment option to save tax and create wealth if you have higher risk tolerance. ELSS invests at least 80% of its assets in equity and equity linked instruments. It is a diversified equity mutual fund that invests in stocks across sectors, industries, and market capitalization. If you invest in the ELSS, you get a tax deduction under Section 80C up to Rs 1.5 lakh per financial year. ELSS has a 3-year lock-in period which compels you to stay with the investment. For example, popular Section 80C investments like PPF and NSC have lock-in periods of 15 years and 5 years respectively compared to the 3 years for ELSS. If you earn long-term capital gains from ELSS, they are tax-free up to Rs 1 lakh. However, long-term capital gains above Rs 1 lakh are taxed at 10%. This table is showing why ELSS can be your first mutual fund investment. If you invest in ELSS towards the end of the financial year to save taxes, you have to invest a lump sum amount. Financial experts recommend that you do your tax planning at the beginning of the financial year to avoid any last-minute hassles and mistakes. You can start tax planning at the beginning of the financial year if you invest in ELSS through the Systematic Investment Plan or SIP. It actually helps you regularly invest specific amounts of the money in the ELSS, thereby averaging the purchase price of units over time, called the rupee cost averaging. Investing in ELSS through SIP helps you avoid timing the stock market. If you invest a lump sum in ELSS, you could lose money if your market crash later. You can invest as low as Rs 500 per SIP installment. However, market experts recommend investing higher amounts to reach to your financial goals. You should ideally have up to 2 ELSS in your portfolio for diversification. Otherwise, you will struggle to track and manage your investments.
Many ELSS schemes have around 50 to 70 stocks in their portfolio across sectors and industries. If you over-diversify your portfolio with 3 or more ELSS, there will be duplication of stocks and sectors. Diversification is necessary to spread the risk to reward of your investments, and over-diversification does not have incremental benefits. You can invest in equity diversified mutual funds if you are not looking for the Section 80C tax benefits. It performs similarly to ELSS over time, but you enjoy liquidity as you can redeem the investment in 2 to 3 business days. Suppose you have many ELSS funds in your portfolio, look to reduce them. However, before you redeem the investments, look at ELSS performance and tax outgo.
You must invest in ELSS to attain long-term financial goals and tax savings. For instance, many ELSS funds have generated inflation-beating returns, thereby creating wealth and saving taxes. ELSS invests mainly in equity, and studies show that equity investments outperform most asset classes over time. Moreover, ELSS offers Section 80C tax benefits, and long-term gains up to Rs 1 lakh are tax-free. However, you must stay invested in the ELSS for 5 years or more to maximize returns, even though it has a 3-year lock-in period. Let us understand how to build wealth and save taxes with ELSS. Suppose you invest Rs 10,000 every month in ELSS through the SIP for 20, 25 and 30 years respectively. What would be the size of your corpus assuming 12% annualized return on investment?
As you see from the table, you can easily become a crorepati if you invest regularly in ELSS through the SIP because of the power of compounding. You can also get a tax deduction under Section 80C up to Rs 1.5 lakh per annum, and long-term capital gains up to Rs 1 lakh are tax-free. Use the ClearTax SIP calculator to determine the ELSS corpus.
I hope by now you have understood how many ELSs you must have in your portfolio. Comment clear if you are clear, or drop your questions if any. Don't you want to know the top performing ELSs? Before looking at the top performing ELSs, let us understand how to pick the right ELSs for wealth creation and tax saving.
You must check the ELSS fund's absolute returns over a 3 to 5 year period and how consistently it has outperformed the benchmark and peers. Take a look at the performance of the ELSS in a bull and bear market and pick those which are relatively steady when stock markets crash. Take a look at the ELSS portfolio to determine how much it invests in large cap, mid cap and small cap stocks. You must avoid ELSS that focus on mid cap and small cap stocks if it does not match your risk tolerance. Study the ELSS portfolio for stock concentration and diversification. For example, some ELSs have fewer stocks in their portfolio, increasing concentration risk, whereas others rely on a diversified portfolio. You must check the expense ratio of the ELSs. It is the cost of managing the fund, and a higher expense ratio reduces your return on investments over time. Firstly, Quant Tax Plan Direct Plan Growth has generated a CAGR of 21.39% over 5 years against a category average of 9.77%. It has an expense ratio of 0.57% and assets under management of Rs 1,316 crore. Secondly, Mirai Asset Tax Saver Fund Direct Plan Growth has generated a CAGR of 15.99% over the 5 years against a category of 9.77%. It has an expense ratio of 0.52% and assets under management of Rs 11,963 crore. Thirdly, BOI AXA Tax Advantage Fund Direct Plan Growth has generated a CAGR of 15.41% over 5 years against a category average of 9.77%. It has an expense ratio of 1.28% and assets under management of Rs 596 crore. Canara Robeco Equity Tax Saver Fund Direct Plan Growth has generated a CAGR of 14.68% over 5 years against a category average of 9.77%. It has an expense ratio of 0.69% and assets under management of Rs 3,628 crore. Lastly, IDFC Tax Advantage Fund Direct Plan Growth, which has generated a CAGR of 13.95% over 5 years against a category average of 9.77%. It has an expense ratio of 0.81% and assets under management of Rs 3,742 crore.
ELSS has an advantage over other equity funds because of the Section 80C tax deduction. It has an automatic wealth creator if you pick the right ELSS and invest through the SIP over time. This video shows you top tax saving funds. You will find curated lists of other backs like Max Tax Saver, Better Than FD, Bold Wealth Builder and more to meet to your financial needs on the Lakh app. Please click on the link given in the description box to download the Lakh app and explore other investment options. Thank you so much for watching this video. If you have any queries related to investments and taxes, please comment them below as we will address them as soon as possible. Stay tuned for more updates and don't forget to subscribe to our channel for more cryptocurrency or financial related content. Take care and goodbye.